Hey everybody, welcome to Head Startup. On today's video, I'm going to be basically talking about investing in ETFs in Ireland. So a lot of people don't really consider the tax effects before they invest in an ETF. And ETFs has become really popular in Ireland. So it's become really accessible because of apps like the Giro, and then it's really low cost as well. So this has really driven the popularity of them. But a lot of people get into them and they never really consider the tax effects. So they assume that the tax rate that is applied is the same as for normal stocks, which is the CGT rate of 33%. But in fact, there's three different tax rates that could apply depending on different scenarios. So it could be the CGT rate, it could be the exit fee rate, which is 41%, or else it could be the marginal tax rate, which goes up to around 52% at the moment. So there's a lot of grey areas around it. So I'm going to try and give you a guide because there's not much really useful information on revenue that I find. So I'm going to try and give you a simple guide so you can really assess what kind of tax rate you're likely to be paying. The major things that are really going to dictate what tax rate you're going to be paying are going to be where the fund is domiciled, where you are domiciled yourself, and also the structure of the fund. So let's start off here and just talk about a few different examples. So just say your ETF is domiciled in Ireland. That would mean that you would actually pay a rate of 41% on the gains and also 41% on any dividend income that you receive. So there's no stamp duty when you buy in, and also, so let's say an example of a popular Irish domiciled one would be the VUSA ticker, which is a Vanguard S&P tracked ETF. So if you have something like that, you're likely to be paying 41%. For EU domiciled ETFs, they're more or less the same as Ireland, so you pay the 41% again on any gains and any dividends, but it depends then. There's a little bit of a grey area around if your ETF is a use it or non-use it. So if it's a use it, it's definitely going to be the 41%, but there might be specifications for any non-use it ones that might slightly alter it, so you might not pay the exact same tax rate if it's a non-use it ETF domiciled in the EU. Then for any ETFs that are domiciled in, say, the US or EEA countries or any other OECD country, any gains are taxed at the capital gains tax rate. So this is kind of handy in the fact that you also get the capital gains tax exemption for this, but you don't get it for the ones I mentioned previously that are on the exit fee rate. You don't get any capital gains tax exemption, obviously. But your dividends will be charged at your marginal tax rate. So any dividend income there will be at, like, if you're on a high salary, then you'll be paying about 52% on any dividend income. So another common one there again for Vanguard is the Vanguard VOO. So that is another S&P tracked one, but it's domiciled in the US. But actually, since January 2019, Irish people are actually restricted from buying any US domiciled ETFs. So I'm going to give you a bit of a table here, and I'm just going to put it up on the screen here, and it's going to give you kind of a summary of the situation. So you might want to screenshot this and use it to just assess your own portfolio, make sure that you're supposed to use the most tax efficient ETFs that are there. This is actually taken from the informeddecisions.ie blog site, which is kind of a handy little summary, I think, that people can use. So taxes are then based on a self-assessment basis, like the rest of the other taxes that we pay every year. So in most cases, you'll need to file a Form 11 with revenue. So that's how you're going to actually file your gains and your dividends through your Form 11. I'll try and get to doing a tutorial on this soon, so make sure to subscribe to the channel so you'll see that pop up on your feed sometimes.